go, here we go. Yeah, at the top of the class on a roll. Hey, and it's time to run it up. Yeah, you know. Yeah, mask down, put the pedal to the floor. Yeah, on a roll, here we go, here we go.
What is going on, everybody? Welcome back to the channel. And in today's video, I want to show you guys an update that was made to Lux Algo's support and resistance premium indicator that improves it infinitely. Now, this is not just an update, guys. This was a complete rework of this section of the indicator, and it is heavily based on smart money concepts, which is an emerging trend in the trading community because, well, it works. With so many new features, guys, I'm going to go ahead and try to break down this in completion in this one video and show you guys the ins and outs of the indicator. And at the end of the video, I'm going to show you guys kind of how I set my charts up because there's a lot of stuff in this indicator. And if you had it all on your chart at one time, it could get a little overwhelming. So I'm going to show you guys the features I find the most useful so you can get a simple setup to help you get in and out of really profitable trades. And don't forget, guys, if you want to sign up for Lux Algo, they are currently at this time of recording doing a Black Friday sale. It's gonna be huge, so go ahead and click that link in the description down below and take advantage of this deal. They offer all different types of payment methods and subscription length. If you wanted to do a monthly subscription, you could do that. They do yearly subscriptions, lifetime subscriptions. And best of all, they do a 30-day full money back guarantee. So you could try this indicator out for 30 days. And if you don't like it, you can go ahead and let them know and they will give you a full refund. And again, they're running a crazy Black Friday sale. So if you're looking to get this at the cheapest price possible, this is probably your best chance to get in super, super cheap. So without further ado, guys, let's go ahead and jump into those charts. I'm going to break down each feature of this indicator and kind of let you guys know how I like to set my charts up so I can have a simple yet powerful indicator on my charts. Let's get into it. So guys, here we are on the Bitcoin 4-hour chart. Now, to get Lux Algo onto your charts, if you just got it and you have not used it yet, go ahead and click on the indicators tab. You're going to want to come to invite only script, and then you'll see Lux Algo Premium does come with Lux Algo Premium oscillators, which does pop up on the bottom of your chart, and you have the Lux Algo Premium price action concepts, which is the indicator we're going to be talking about today. But again, if you sign up for Lux Algo, you will get all three of these. So let's go ahead and click on this. You could also click that little star to add it to your favorites page, which is how I have it. And then you're just going to go ahead and click here, and it will populate onto your chart. So here you go, guys. This is the new Lux Algo price action concepts indicator, and you can see just real quick, I'll break down what we see on the chart here. You have your order blocks with some really cool information that we'll get a little bit further into in just a second, but you have your order block, and then you will notice you actually have your market structure labeling by these green lines with these little texts that says BOS, which stands for break of structure, and then you have your CHACH, or change of character, and we're going to break that down in just a second, but this is super, super, super cool. This indicator has a bazillion different features, so I'm going to break them down right now so you guys can figure out what you want to use and what you might want to kind of leave out of your indicator so you don't clutter your chart. So to open up the settings, come up to your Lux Algo price action concepts and go ahead and click this cogwheel, or you could just double click on the name and it will open this window, and go all the way to inputs here, and this is where we will start to break down this tutorial into sections. First, we're going to take a look at market structure. So one of the really cool things about this indicator is it labels your market structure in real time. Now, I will be coming out with some videos kind of explaining market structure and how to trade using market structure, but for right now, I'm just going to assume that everybody knows what this is, and if you don't, stay tuned because I will make tutorial videos about it. But in short, market structure just puts the real-time market structure labeling on your chart like we just looked at with the break of structure and change of character. And right here, you have internal and swing. All internal is a smaller portion of price action, right? This takes a smaller amount of candles into account. So your internal structures will show up in smaller price action ranges, where your swing market structures will pop up over larger areas of price action, right? So that kind of manifests itself. You could see these dotted lines are your internal market structure, and then these solid lines are your swing market structure. Now, to take a look at this, I'm going to go ahead and hide the order blocks and everything else we have on the chart. just so we can isolate the market structure. And you can see here, if we zoom into the chart, these dotted lines represent the internal market structure, meaning just a more zoomed in version, right? So right here, you have a change of character. Now, with change of characters, it does indicate a potential trend reversal, right? So you can see we were coming down here. We had a high, a low, a lower high, and then we kind of made a higher low here. And then once we broke through this high here, we got a change of character label indicating that the trend may be reversing to the upside. So when you see change of character, that indicates that a trend reversal may be occurring right now, and this does pop up in real time. So on top of that, you'll see right here, your next dotted line says break of structure. Now with break of structure, essentially what prints this break of structure line is the break of a previous high, right? So we had the change of character here as we made a higher high. And then as this candle broke these highs right here, which were creating a little bit of resistance, the algorithm recognizes that we broke through this and you get a break of structure label. And the break of structure label could indicate a trend continuation. So let's actually go back to a lower time frame so I can just find a strong uptrend or a strong downtrend where you can actually see this play out in real time, right? So right here, you can see we were in a downtrend, and then once we broke this previous high here, you get a change of character letting you know that that downtrend may be ending and we could be starting a new uptrend. And that's what that change of character would be signaling to you. Now, on the change of character, real quick, there's two types of change of character labels. One is just Chach, and then the other one is Chach Plus. Basically, you could just think of Chach Plus as a stronger indication of a trend reversal incoming, right? It just identifies some earlier signs of a trend reversal, such as a higher low or something like that, which indicates a stronger trend reversal. So if you see a change of character, that means the trend may be reversing, and you may be starting a new trend. And if you see a Chach Plus, you just want to put a little bit more weight on that. It's a little bit of a stronger signal. But after that, you get the change of character, and then we come down for a higher low, and then we continue on. And as we break this high, you see we print a break of structure. And then so you come down, you break this previous high, printing that break of structure label, and then you print another, and then you go ahead and make another higher low. And then once you break this resistance, you get another break of structure label. You come up, you make a higher low, and then once you break this resistance here, you get another break of structure. So what I want you to take away from this is the break of structures pop up in trend continuations. So the Chach or change of character indicates a trend reversal, and the break of structure indicates potential trend continuation. So you got the reversal with your bullish change of character, and then these break of structures are indicating continuation, as obviously this trend continued to the upside. And obviously, guys, this works in the bullish direction or the bearish direction. But my point here is that these dotted lines are kind of your internal market structure, right? So you get the change of character, break of structure, break of structure, break of structure, right? And then I want you to pay attention to these solid lines, which are your swing market structure, right? Now, this is basically just taking more candles into account. So although this change of character may be indicating an internal uptrend, which might be good for maybe a scalp trade or something like that, these solid lines indicate much, much greater breaks of structure or changes in character. So that's basically the only difference. You can see here, you came here, right? And then as you broke this low right here, you got a change of character. It thought a longer term downtrend may be on the horizon, but then we got another break of structure to the upside. But when you come inside of where that change of character happened, you have change of characters within the price action within that swing change of character, right? So the dotted lines are more zoomed in market structure labeling, and then if you zoom out more, you look at the solid lines, and those indicate, you know, longer term trend changes or changes in character or breaks of structure. I think that makes pretty good sense. If you're looking for more macro trend changes, you'd be looking at the solid lines. And if you're zooming in to maybe just get into some scalps, you'd be looking at those dotted lines. And the other part of our market structure labeling is equal highs. You could see that represented right here. Now you have bearish and bullish equal highs. And when you see them pop up on the bearish end, you could see you had a high here and a high here. It could be indicating a double top pattern, right? Which would indicate a potential trend reversal. So that actually wound up playing beautifully. You get a break of structure, you get another break of structure before coming up and getting that change in character before starting the uptrend. And then on the other hand, you have equal lows. Basically, this pops up on the opposite end of the equal highs, and it could indicate a double bottom pattern, and this would also indicate a trend reversal, but to the upside instead of the downside. So you can see you had a low here, and then an equal low here, or at least somewhat equal, indicating this could be a double bottom, and you could start a new uptrend, which you got confirmed here with your internal change of character, indicating that you were in starting a new uptrend, which was short-lived, but you could just see how those equal lows are just kind of a signal like, hey, this might be a trend reversal here. So break of structure, bearish or bullish, indicates trend continuation. Change of character, bearish or bullish, indicates a trend reversal, and your equal highs and equal lows indicate trend reversals as well. Now, the last part of our market structure section is the candle coloring. So if you like candle coloring, you'll enjoy this a lot. It basically just changes the candles from green to red or light green to dark green, depending on the trend. Obviously, you could see we have red candles here during this entire downtrend. So, you might have been looking at this price action right here, and you saw a change of character plus, and that's a pretty good indication that you're about to start a downtrend, and you have the confirmation of the candles turning red, and then you get a break of structure. So you're already expecting a trend reversal, then you get a break of structure, and then you get another break of structure and another break of structure as the trend continues to the downside. And you can see right here, you get a change of character on the bullish end. It's actually a Chach plus, indicating it's a strong signal, and you get a big candle, and starts to turn green here, indicating that you could be starting an uptrend, and then you get your break of structure in the bullish direction, and that was a short-lived one before you took a little dip and then continued back up, but the candle coloring can be very helpful for those who like looking at that kind of stuff. And last but not least, you do have a new dashboard up here, which is very, very cool because it actually shows you the 15-minute, 1 hour, 4 hour, and daily time frames. It lets you know when you're having bullish or bearish changes of character on those time frames. So you could kind of see here the 15-minute and the 1 hour are starting to get bullish change of character. So you could use that information to your advantage without actually having to look through the market structure. You could just look up and be like, okay, we're getting a change of character. You could look up to this dashboard and be like, okay, we're getting a bullish change of character on the 1 hour. Let's go check it out. So super, super cool, super, super easy to read. And for those of you who like trading based off of price action, this could be super, super helpful for you. So let's go ahead and go back into our settings here, guys. And I'm going to go ahead and turn all of this stuff off just so we can keep the chart nice and clean as we move on to the next section of this tutorial, which is order blocks. Very similarly to the market structure section, we do have internal and swing order blocks, which essentially are the same thing. Your internal order blocks will be looking at smaller ranges of price action, and then your swing order blocks will be more on a zoomed out perspective, showing you over a greater length of time where those order blocks are. And let's go ahead and turn these on. We're going to start with internal, and you can see these do pop up as these white boxes with these green and red bars and these metrics inside of them, which are very, very, very cool. I really like this feature about this Lux Algo indicator because it lets you know where the order blocks are. And basically, if you're not familiar with order blocks, all an order block is a large order, typically from a bank or institution. So these will essentially act as support and resistance as we come down to a different time frame here. You can see we came up here and we got rejected from this order block. We'll probably come out with some tutorials explaining order blocks and price action trading more in depth. We're going to try to get a little bit more into that, but you could see here just from a simple perspective, even if you don't understand order blocks, you could see we came up, found support on this order block, came back up, double tapped it, and then as we approach this order block here, we got a harsh rejection before getting rejected from this order block, and now this order block is acting as resistance. So you can basically treat these as levels of support and resistance. You could also take a step a little bit deeper by looking at the green and red bars. So basically what these indicate are when this order block was created, there were more buyers than sellers. Now, I don't pay too much attention to this. It doesn't mean that because there's more buyers here, if we come down here, we're instantly just going to shoot up, although that could be the case. It doesn't really play out like that. So I actually don't really pay too much attention to this, but it is really nice to understand, just to see the buying versus the selling volume once that order block was created. Very, very insightful to know that information. And something I pay a little bit more attention to are these metrics inside of the order blocks. Now you can see this is the percentage. You have 34% up here. These are overlapping, so I can't really read those, but 35% here, 22% here. So if you had an order block that had a high percentage of volume in there, you would go ahead and put a little bit more weight on that order block. So you can see right here, you have about 8% on this order block. So this order block would, in theory, not be as strong as if you were to come down and test these order blocks down here. Now, not only do you have two order blocks down here, but these are both higher percentage, and they both add up to a higher percentage than 8%. So if we came down to these order blocks, it would likely be much stronger and act as support rather than if we came up here. This is only 8%. This wouldn't be the strongest level of resistance for us, but because we have such a high percentage down here, we would expect these levels to act as strong support. And then you actually have the quantified amount of volume right here. You can see 14.9 million, 5.78 million, 9.23 million, and then there's only 3.6 million up here. So super cool that they give you the insight not only to the order blocks, but also metrics inside of the order blocks. They give you the actual volume metrics inside of the bars to let you know which ones might be stronger or might be weaker, which is super, super, super helpful. But if you don't understand order blocks or you're not really there in your trading journey yet, you could just think of these as levels of support and resistance. And if you come into your settings, you can actually go ahead and turn off the metrics and the internal volume bars, and then they just pop up as white bars, and you could just treat these as levels of support and resistance without even really looking at any of the metrics. And then with the swing order blocks, this is essentially the same idea, except again, these are going to be more macro. You could see the internal order blocks. We obviously had one, we had one up here, we had one over here, and these internal order blocks would like kind of populate themselves on smaller price action, where the swing order blocks are looking at a wider range of candles. There you go. You see the internal ones are very close to all the price action, but once you get rid of the internals, you could see that it takes a wider range of candles into account, so you just have an order block down here and an order block up here. So pretty self-explanatory, right? The swing order blocks are going to be farther apart and over a larger range of candles, where the internal order blocks are going to populate themselves in the nitty-gritty of the smaller price action. Overall, very, very useful when trading to get this order block information on your charts. So guys, that is our order blocks section of this indicator. Super, super helpful, super insightful with those metrics inside of the order blocks. Now, the last part of this order block settings section is going to be the mitigation method. And basically all this is if we go to regular candles and we go ahead and hit the bar replay mode, what the mitigation method does is it lets you adjust what you want to indicate that the order block is now irrelevant, right? So if you say, wick, the next time you wick into that order block will disappear because it is no longer relevant. So there you go. We wicked into that order block with a nice strong, we wicked right through it, and that made the order block disappear because we went into that order block, grabbed the liquidity, and then came right back down. So because that order block is now no longer relevant, it disappears, and that mitigation method is wick, right? So we wicked into it, and that made it disappear. Now, you could change this to close. So you could see if we change it to close, those order blocks are now still there because we did not close candles past this order block. And then the other method would be average, which basically just takes an average. I like to make it where it's a wick because a lot of times with liquidity grabs, you will see long wicks. So I do like to kind of invalidate these order blocks if a big wick passes through them. So I usually keep it on wick, but you could change this to your personal preference. So guys, that is our order block section. Now let's go ahead and move on to the next section of this indicator, which is liquidity concepts. Now, we kind of just talked about how that wick came up and reached in and grab that liquidity from that order block before reversing. Now, this actually has a couple of different features, but I'm going to start off with liquidity grabs. Now, liquidity grabs are pretty cool. They can indicate trend reversals, right? So basically, this just indicates the market just coming up and grabbing liquidity before reversing to the downside. And essentially, really all you need to know about this is they work as, potential long and short confirmations, right? So you can see right here, we got a nice liquidity grab at the peak of this uptrend, and it is highlighted by a red box indicating that we grabbed liquidity to the upside and now might reverse back down to the downside. And that one actually would have played out pretty decently. And then if we scroll back a little bit in time, and right here is another good example of a bullish liquidity grab. You could see this long wick to the downside. Like I was just saying, a lot of times those long wicks indicate liquidity grabs, and you could see it is highlighted by this blue box, and this was actually the end of this downtrend before we actually wound up coming up for a new uptrend. And you get a nice little confirmation with that liquidity grab. So, if you're looking at things such as bullish divergences, if you go ahead and pull up your Lux Algo premium oscillators and you pull up something like the ultimate stochastic here, you can see we actually have lower lows on our price action with higher lows on our ribbon here, indicating there may be a bullish divergence with the confirmation of this liquidity grab, letting you know that this might be a good long entry opportunity. And if you went ahead and entered on that bullish divergence / liquidity grab, you could have gotten a nice 4.5% move out of that and could turn out to be some pretty good profits. So that's the liquidity grabs feature. Now let's go ahead, and they now have liquidity zones or liquidity trend lines. Basically what this does is it auto-populates trend lines where there is a lot of liquidity, letting you know where you may be likely to reject from with these bearish liquidity trend lines. You can see we wicked down, came down, rejected, boom, and then we got a big rejection before finally breaking it and then getting rejected from this trend line. And this obviously works on both ends, bullish and bearish. You can see here we came down with a nice little bounce, and this just gives you nice little support and resistance zones. I personally don't use this very often, but this is a pretty nice feature if you're looking for some good support and resistance levels. It could definitely help you out a lot, and it looks real nice with the Heikinashi candles. You can see the beautiful bounces and rejections off of that line there, and then same thing here. You just dip right into that liquidity zone, bounce, 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 and then you break down and get a nice big bounce right there. So again, one of those features I don't use as often, but hey, everybody's different. Just because I don't use it doesn't mean that you can't. And then obviously this actually is one thing that remained somewhat the same on this indicator, and that is the patterns detection. And you can see here, this basically just gives you automatic pattern detection. And then you can see up top here, detected pattern, and then it says ASCBW, which stands for ascending broadening wedge, which is obviously the pattern we have right here, as you have an ascending broadening wedge. So it just gives you nice pattern detection depending on, what patterns are popping up on the chart. I'll try to find something different for you guys here. There you go. You actually have a symmetrical triangle here, which is actually a neutral pattern. So this is either going to break up or down. Kind of a 50-50 shot there, but, pretty simple feature, super useful for those of you who don't want to hunt for those patterns. And that's about it on the liquidity concepts over here. Love the liquidity grabs for sure. And now we have our next section, which is the imbalance concept. Now, I'm only going to cover one of these. There are actually 3 different ones. You have fair value gaps, activity asymmetry, and then balance price range, but we're just going to focus on fair value gaps. So if we go ahead and turn these on, if you guys don't know about fair value gaps, essentially they just show an imbalance over 3 candles. Typically how fair value gaps work are once you create a fair value gap, it is likely that price will come back and fill that gap. So you can see that on this move to the upside, we actually created 2 fair value gaps, one right here and one right here. And although it's not 100%, it would be likely that at some point the market will come back down and grab these fair value gaps and fill them to balance the market. And these do typically pop up on big candles. As you can see, we had an aggressive move to the upside, which creates that gap. And then again, price is likely to come back down and revisit these at some point. And you can see you have them to the upside as well. So at some point, it would be likely to come up and fill these gaps also. So if we go ahead and come into our bar replay mode, you'll see these fair value gaps start to populate. I'm going to go ahead and play the price action here. You can kind of see we start to create a whole lot of fair value gaps here. So we would expect to come fill these. Now, it doesn't mean it happens instantly. As soon as they pop up, you know price is going to go there. You just know at some point these gaps are likely to come get filled. So if we continue on, we're just continuing to create these fair value gaps. Another thing that's interesting is a lot of times with these fair value gaps, you get a quick move to come up and grab those gaps. But if we go ahead and continue, there you go. We got another big gap right there. And we just create more and more. So you have a bunch of fair value gaps here. It would be likely to come up and fill these at some point. And if you go ahead and look at a little bit of volume, you'll see our point of control is up here as well. And you know price action is attracted to the point of control. So it would make a lot of sense to come up and grab these gaps. But let's just go ahead and see what happens. Boom. See, this is what I was talking about. It does actually a lot of times indicate that you could come up and grab those gaps with a big move, right? So we came up and grabbed all those gaps and then created a massive gap down here. So this one would also be likely to get filled again. But you can see we did come up and we cleared all of those fair value gaps that we had here. Now those are all filled, and now it is likely we come down and fill this one here. And now you see we have all these green fair value gaps down here, so it would be likely to come and take all these out as well. So now you're looking at this price action, and, you know, just in general, we are in a big bear pennant here, so I would expect this to break down. However, you're looking at this fair value gap, knowing that it is likely for price to come grab this. So let's go ahead and play that price action out, and let's see if we come down. And boom, you start getting that aggressive move to the downside. You fill all those gaps, and now we have all these red gaps above us, so it would be likely to come up and grab these at some point as well. But this is kind of how those fair value gaps work and how you can use them to kind of keep your eye on the market and, you know, keep eyes on certain points of interest. You might be expecting a move to the upside, and you might have a strong level of resistance that you're looking at, and you might be like, and there's a big fair value gap down there too, so I know it's likely that we go up and fill that. Obviously, you want to use confirmation. You don't just want to trade based off of the fair value gaps. But if you have everything screaming that you're going to rip up to a certain price and there's a fair value gap there, it's a little bit of extra confidence knowing that it's likely for price to go up and fill that gap. So those are the fair value gaps, guys. You can go ahead and change the settings here if you want to change the colors of them or something like that. You can also change the mitigation method similar to the order blocks. Same deal. You know, if you want them to wick, if you want to wick into them and make them disappear, or close candles, or use an average, that's kind of self-explanatory. And then you can look at multiple time frames here. And this is kind of something that I was playing around a little bit. If you wanted to kind of extend these bars out, you can make this number a little bit higher. I'm going to change mine to 60, and it just makes the gaps kind of extend a little bit. So you can see, even if you extend this one out a little bit more, I'm going to go ahead and extend this one to 100. Boom. You could see that we actually tried to come up and close these gaps up here. It kind of just gives you a little bit of extra visual aid to where these fair value gaps actually are, so you can have your candles come up and wick into them. And then getting down to the end of this video, guys, next we're going to turn off our fair value gaps and turn on our premium discount zones. Now, this is actually very, very cool. Now, I've already tested this. I couldn't get any value area highs, POCs, and value area lows on these. So I don't know how exactly these are calculated. However, it is actually kind of interesting because this gives you a fair range of your price action, and you have a 49% premium up here. So if we do come up to that level, you can it might be a good place to start looking for shorts because the price is at a premium, right? You could think of this red line as oversold, and then equilibrium, this white line, would be a fair value for the asset. And then as you come down to your discount zone, this would indicate that the asset is oversold. So you could see as we got that little liquidity grab down here into the discount zone, that would have been a great place to get into a long position, and you knew that it was coming into the discount zone, letting you know that it might be oversold. and you might get a move to the upside, and then you can go ahead and target that equilibrium as a potential profit target. And then if you start moving your way up and you're still in your long, you might want to target this as your last profit target, because you know if you get into this overbought area, it may be likely to get a trend reversal to the downside. So this is super cool to kind of give you context to where the price would be overbought and oversold or at a fair value on the actual charts. I actually really like this feature. And obviously you could change all the different colors of this to your liking. But that's your premium discount zones. I really like that feature. And on to our next feature, which is accumulation and distribution. And if we go ahead and turn that on, basically what this is indicating is potential accumulation and distribution. And this is actually respected pretty well on the charts here, guys. This is indicating that there may be some accumulation going on down here, which would indicate that there may be a move to the upside on the way. And you can see we actually did make a pretty decent move here, bringing you up about 7%. And then as we get to the top of that move, there was potential distribution going on, indicating a potential move to the downside. And then that is exactly what we got. Now, obviously, this does not play out all the time. It was kind of indicating accumulation here, and then we got a big dump before getting that big move up. But I do think that was a big news day, so do take that into account. And then you could see we have more distribution going on up here, so indicating a potential move to the downside, which is what we got. So just very interesting. Again, not something I use too often, but it's definitely there if you want to use it. And then our last section here are highs and lows, which are really cool. This basically allows you, if you wanted to look at past weekly or daily or monthly or quarterly or Monday's previous highs. These are typically very key levels of support and resistance. So I do like keeping these up on my chart to kind of help me know where there's going to be some serious resistance. And as I updated our free Discord today about a potential short opportunity, it was basically based off of, number one, a bearish divergence on the 12-minute time frame confirmed, as well as testing the previous daily high, which I know is going to be very strong resistance. And on top of that, we also did have our discount zones. And on the 12-minute time frame, you could see we did have a bearish divergence as price came up, and I did have my oscillators coming down, indicating a trend reversal on the way. But we were also testing that previous daily high and coming into a premium zone, which was indicating that the asset was actually overbought, indicating a potential move to the downside. And now we're hoping to get a move down to the equilibrium line. So these previous daily highs can be very helpful. And you can see once we reclaimed the previous daily low, that's when we really got our move to the upside, our big move to the upside. So this is kind of how you can use the previous daily lows and highs, or the previous weekly highs as well. And you can see the previous weekly high is all the way up here. So if we were to make it a move all the way up to about 17,165, I would expect some heavy resistance at this level, being a previous weekly high. And then you could just change, your general styling settings down here, change the color of things, change the font size, stuff like that. You could also change the location of your dashboard, which is super helpful as well. So guys, I think that's all the time we have for this video. I know that may have been a little bit of a long one, but this indicator is jam-packed with new features, and they are super reliable and super actionable and useful. I mean, this is absolutely incredible. Kudos to Sean and the team over at Lux Algo. You guys are absolutely crushing it. This is a super helpful addition to the Lux Algo Premium Indicator. And again, if you guys want to sign up and save with our discount code, we worked out an awesome deal for the CandleMafia where you could save 20%, and they're doing a crazy Black Friday deal right now. So if you want to get this indicator on the cheap, go ahead and click that link in the description down below. And don't forget, they also have a 30-day money-back guarantee. With all that being said, guys, that's all the time I got for this video. I'll see you in the next one. Frankie Candles out.
Here we go, yeah. At the top of the class on a roll, hey. And it's time to run it up, yeah, yeah. Mask down.